Abandonment of Homestead. Legal document which reverses Homestead Declaration. A homestead is a real property which is used and occupied by its owners as a family home. The term is important because a homestead is protected by law from unsecured creditors. A homestead declaration, filed with the county clerk, officially establishes a property as a homestead. The homestead protections in bankruptcy are from unsecured creditors, that is, things like credit card debt. The homestead exemption does not protect a home from foreclosure from mortgages and trust deeds. These are secured debt secured by the property. The homestead exemption is limited to protecting the first $75,000 of a home's value from a judgment against the head of household. A mentally or physically disabled person can be protected from unsecured debt judgment up to $150,000. The homestead declaration must be filed prior to the judgment to be valid. Because only one homestead can exist at a time, an abandonment of homestead is the official document which must be filled out to reverse a homestead declaration on one home so that it can be filed on another. Related words: Homestead Declaration. Alluvial deposits. Sand or dirt moved by water and deposited elsewhere. Water is a very powerful force. Water is very good at picking up sand and dirt and moving it from one place to another. When the dirt is put down by the water, it is called alluvial deposits. Alluvial deposits are often put down in layers called strata. Reliction is the extending of land by the natural deposit of dirt and soil by moving water, called alluvial deposits. Reliction results in accession. Accession is the increasing of one's land by man or natural forces. Accretion is the natural buildup of soil on a property caused by natural forces, like moving water, as in a property which borders a river. Alluvial deposits are the dirt and sand which is picked up by natural forces like water or wind and deposited back down. Related words: accession, accretion, erosion, avulsion, reliction. Estate of inheritance. Estate which does not depend on a person's life. An estate is the ownership, interest, or claim that a person has in real property. The two types of estates are freehold estate and less than freehold estate. A less than freehold estate is the estate held by a tenant who leases (rents) a property, also known as a leasehold estate. There are two types of freehold estates: estates in fee and life estates. Life estates are dependent on the length of the life of a specific person. Estates in fee include fee simple absolute and fee simple qualified. Fee simple absolute is the most complete form of estate or complete form of ownership or complete form of interest or claim a person can have in real property. A fee simple absolute estate is a perpetual estate or an estate of inheritance because it does not end at an owner's death, but can be transferred to heirs by will. Synonyms: perpetual estate. Mortgage broker. Mortgage originator sells loan to mortgage lender. A mortgage broker is a mortgage (or trust deed) originator who sells the mortgage to a mortgage lender even before the loan is funded. The mortgage lender will service the loan or may sell the loan again to another mortgage lender. A mortgage banker moves money around the country to feed mortgage brokers and mortgage lenders who need additional mortgage funds. Mortgage lenders may be credit unions, mutual savings banks, or thrifts or insurance companies. A mortgage broker is a mortgage originator who sells the loan package to a mortgage lender even before the loan is complete. Related words: mortgage banker, mortgage company, mortgage lender. Trust account. Brokers account for holding clients' money. When a broker accepts money from a client, and that money is to be deposited, the broker deposits client funds into a trust account. If a broker has associates, all accepted funds should be written in a log to keep record of who accepted what from which client. The client must be given a receipt for accepted funds. A trust account is a separate account specifically for holding client money. Blanket loan. Loan which covers several properties at the same time. A blanket loan is a loan which covers several properties at the same time. The loan can be a blanket mortgage or a blanket trust deed. Blanket loans are often used by developers who are building a subdivision. The blanket loan will then contain a partial release clause which allows the borrower to be let out of a part of the blanket loan each time one of the properties of the subdivision is sold. A property which is, quote, released, end quote, from the blanket loan is conveyed via a partial reconveyance deed. A blanket loan is a loan which covers several properties at the same time. Related words: partial release clause. Zoning. Regulated property use according to districts or zones. Zoning is a method used by city planners to divide a city into similar use areas. It's a reasonable idea that residential homes should not be intermingled with factories. Factories are noisy, sometimes dirty, and on occasion run 24 hours a day. Trying to go to sleep with a factory running all night next door is not pleasant or desirable. So we have residential zones where homes may be built and maintained, and we have industrial zones or regions where factories may be built, maintained, and operated. We also have retail zones where shops and stores are located, and also commercial zones or business districts where companies may build and occupy office structures. Zones are areas or regions within a city or municipality where like-use structures and users are grouped together. Zoning is the process of dividing and maintaining areas of a city or municipality by uses. Tax deed. Deed used when a property is sold to cover non-paid taxes. If property taxes are not paid, the local government (county) forcibly takes a property from its owner (now a debtor to the government) and will sell his property at auction. The proceeds from the sale are to cover unpaid property taxes. Since the property is being transferred from one person to another, a deed is required to transfer title. Real property is transferred with a deed, and personal property is transferred with a bill of sale or a receipt. The deed used is a tax deed. A tax deed is used to transfer title of real property from one owner who owes back property taxes to a new owner. Related words, title. California Department of Veteran Affairs. Government department which manages CalVet Loan. The California Department of Veteran Affairs manages the CalVet Loan, which is a special loan for veterans. The program allows the purchase of a home or farm. The CalVet Loan is not just guaranteed, but administered by the California Department of Veteran Affairs. The CalVet program buys homes outright and then resells them to the veteran through a land sales contract. Related words, land contract. Conditional sales contract. Land contract, an agreement to transfer property. There are many names for this type of transfer: land contract, land sales contract, conditional sales contract, agreement of sale, contract of sale, contract for deed, installment sales contract. The point of a land contract is the agreement or contract to transfer property from one person to another. The complications of such an agreement are in the deed, title, and financing. If seller agrees to sell to buyer, it is a land contract. However, if seller has a trust deed on the property, it is likely the trust deed agreement has a due on sale clause, parentheses, also called an acceleration clause, end parentheses. The due on sale clause says the note is due in full upon transfer, which is exactly what a land contract is, an agreement to transfer the property. The CalVet Loan Program uses a land sales contract to sell a property back to the veteran.